Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu. We've got longtime fools, Whiteman and Matt Frankel, giving a 1 to 10 rating to a name I've probably been called before. It's Adyen, ticker symbol ADYEY. Talk about the business first, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. Both of you are at 6s, Matt.
You're probably right about the name thing. I called you Anand for the first 5 years I knew you until you corrected me. As far as the business, I give it a 6. I mean, when it comes to large enterprise payment processing, they're the clear leader. Their customers are like companies like Microsoft, Uber. If you remember a few years ago when PayPal ditched eBay, that was in favor of Adyen. Or eBay ditched PayPal rather. But the real reason for that I gave it a 6 is payment processing has become very commoditized, meaning that it's really hard to get any kind of pricing power in the industry. And I do feel like given that they are not consumer focused, they have all these big enterprise clients already, growth potential might be a little limited compared to some of their peers.
Yeah, now I got to call you Adyen from now on, right? So there you go. It's funny. As Matt said, 6 feels really low for what I believe is a really good business. I like their exposure to big omni-channel retailers. I like the global reach. There's a ton to like here, but there's so much competition. There's established vendors. There's newcomers like PayPal and Block. And yeah, how hard is it to gain ground in the US with so many domestic competitors? I ended up much lower than I thought, but I do feel like it's probably a 6.
Yeah, I look at my own portfolio and I'm like, well, can I really be bullish on PayPal and Block and Adyen and others? I don't know, right? That's a lot of competition. For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Lose at a 6. Matt, you're at an 8.
I'm at an 8. I've been following this company for a while, and speaking of names, I'm probably going to get wrong. Peter Vanderdas, he founded the business almost 20 years ago and has led it from zero to over $500 billion in payment processing volume. So give credit where it's due. I generally don't like the co-CEO structure like they have. This one feels a little more like a succession plan than he really just wants to share the responsibilities. But he's been in charge in one way or the other since day one and has done a great job.
Yeah, similar. This is, I kept going back and forth here because I'm mad. I don't like the co-CEO arrangement, just period. But I kind of get it in this case. And I do like both of these people. We have a founder, CEO, visionary, and the former CFO who kind of knows the ropes and he's kind of being groomed for the top roles. So I get it. At the end of the day, where I came down is I don't see management as an issue here. I give them a lot of credit for what they built, but I also don't see management as having the magical solution to the potential challenges I outlined before. So I again ended up wanting to go higher, but pretty meh, and a 6.
For financials, a 10 is a fortress, a 1 is yikes. Lose at an 8. Matt, you're at a 7.
Yeah, everything's pretty good. They have a solid balance sheet. I like that they focus on long-term metrics like EBITDA margin goals for the long term as opposed to quarterly results. That's very refreshing in the fintech space. Their margin, speaking of EBITDA margins, it's approaching 50%. It's a very strong margin company. And the company is really disciplined when it comes to spending money on growth, which is also very refreshing in the fintech space. So I give it a 7. It's nothing outstanding, but solid all-around financial condition.
So this is where all my poor scores, where I'm kind of looking forward. But this is just based on what they are today. And what they do very well. Net revenue up 22% in the last 6 months of 2024. EBITDA grew at a faster rate than revenue, which I like to see. I believe they can continue to grow in the, what they say, low to mid 20s through 2026. The question is longer term than that. Balance sheet really strong, 10 billion in cash, just 100 million or so in debt. Bottom line here, nothing about the financials I'm going to complain about. So this is my high score.
And one of the best things you can probably say about Adyen is they do seem very many years in the future forward looking and steady. They were hiring people when people were shedding people in recent years. And I think that's a sign that you're kind of running a steady business and not getting too high or too low. But let's talk valuation. Let's see what you all think in the next 5 years. Lou, how well will the stock do? And then how safe is it? A 10's a sure thing, one's a lottery ticket.
You said it right. Steady. I think this is a market performer. And so for me, that's 5 to 10%. My big picture takeaway here is the glass is exactly half full and half empty here. Okay. I think they're going to continue to chug along and do fine. It won't be a wow. For safety, I'm at a 6. The amount of competition out there is scary. They do rely on a few big customers for a lot of their business, which that's scary. So there is some risk here, but I don't see them disappearing overnight. So I'm not going to go too low.
Yeah, I went with the same 5 to 10% range. I gave it a safety score of 7. I think the business is going to do okay. Not great, not bad, kind of like Lou said. The reality, though, is that there is limited room for enterprise payment growth. They already have a whole lot of it. And margins have a little bit more of an upper limit than they looked like they did a few years ago. I mean, in the 2021 2022 era, Adyen was targeting a 65% adjusted EBITDA margin over the long run, and they've since lowered their long term goal to 50%. So they're seeing that there's a little bit of pricing pressure compared to what they thought. And it does trade at a premium valuation relative to peers. So I think that'll also prevent it from achieving real market beating returns.
Time for everyone's favorite topic. Lou, is there a company in Adyen space that you like better?
So I really don't like any of these pure play payment companies. I prefer some of the banks as well as just more diversified revenue streams. But if I was to buy a payment focused company, I think it'd be PayPal. They have such a great consumer and business franchises, both embedded everywhere. So I think that would be my favorite.
Yeah, I own both PayPal and Block. I've been buying a lot of PayPal in the past year or so. I think the new management team has really got it together and are really doing a great job. Speaking of management, that might be something that Adyen will eventually need is to bring in some outside leadership. But anyway, I PayPal, I think they're doing all the right moves right now, and I'm excited to see where that one goes in the next few years.
Could we see a third co-CEO at Adyen? Thank you to both Matt and to Lou.
Why not?
They've given Adyen an overall score of 6.4 out of 10. Kind of in that, well, yeah, it's all right. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Paycom. Till then, Fool on. Did I tell you all the worst pronunciation of my name ever? Probably did. Omelet. That was